Hello, I'm Pete Sweeney. I'm Asia Editor of Reuters Breakingviews. I'm here at our Predictions event here for 2018. As you can tell, it's quite loud and excited. We just went through an hour and a half of conversation about what we're predicting for 2018. We had some great panelists. Among them, we have Wang Lihong, Managing Director of Bain Capital, who here's to talk with us a little bit about her predictions and her forecast. Thanks for talking to me.
Thank you, Pete.
So first of all, the consumption story. I know as private equity is super interested in the mainland consumption story and cashing in on that. But on the other hand, I covered macroeconomics in China for a while, and there was always debate about how good consumption really was. Statistically, of course, consumption is a relatively low share of Chinese GDP.
Right.
Do you see this being as a big turnaround year as like China backs off on stimulus and investment and really starts turning the Chinese consumer, where we see like signs of a genuine uptick in massive consumer power coming through in 2018?
I feel this is less policy-driven change. It's really coming from the young consumers, and they also have very rich fathers and mothers, and they give them a chance to try new things. So I do think today, when you talk about 1 billion consumers in China, it becomes real. I know people have been talking about this for years, but it's very difficult to nail them down. However, now, if you have new things, quality stuff, people are willing to pay, even content, for example.
Right.
I do think this is the starting of the curve moving up, less policy issue.
Right. So, I mean, in terms of spending, one thing that the consumer stories attract a lot of foreign investment, and there's been this premium on foreign brands for like milk, right. Luxury automobiles, you name it. There's a lot of areas where, I mean, even the Chinese government is kind of irritated about it. They write, state media has articles saying,
right.
Please stop overpaying for foreign stuff. Chinese stuff is fine. But, in recent years, especially last year, we've had some Chinese brands come up and people say, well, it's really not bad. This is a decent cell phone stuff. I mean, do you see like the foreign price advantage getting eroded in China going forward vis-a-vis domestic competitors?
Overall, I think that will be a trend. So you will see the premium become smaller. However, I think in certain category, because the food safety, for example, or aspirational, certain sectors like food, like the milk powders you mentioned, or the luxury, I think they will still kind of be able to charge a premium. However, a lot of things in the middle, if you want an innovation or you want a convenience, or sometimes even is the very local content may win. Games, for example, or the TV series, for example. So I think there is a diversion. One is the very good things globally will still be there, be able to charge a premium. Then you have a lot of consumptions generated locally.
We could just talk for a little bit, last question, about the flip side. So, I mean, the last couple of years, we've had a lot of investment-driven growth in China.
Right.
That's created, some really great companies and some really bad ideas, some investments places that were just kind of there to drive growth.
Yeah.
I know Bain, looks also at distressed debt and opportunities in that. Like, how do you see 2018 working out for the foreign investor? This is one area where foreign investors have a lot of experience compared to domestic counterparts who've never really had a down cycle. How do you see 2018 working out in terms of opportunities for distressed debt in China and elsewhere?
Yeah, I think the interesting thing is, on one hand, you see the economies overall, globally, 2018, most of the places will remain strong. I don't see many predictions that a certain area will collapse. But at the same time, there was so many issues on leverage, on overheating, as you mentioned. So the distressed side, there's also plenty of opportunities. Bain play actually globally in distressed assets. We play in India, in China, in Europe, less so in the US. But I do think if you pick the right course, it can be distressed debt. It also can be very healthy companies, very growthful companies.
Great. Thanks so much.
Thank you.
Thanks.